Good afternoon, Eswatini. It's a Monday, April the 14th, and you're watching Market View, the program that dissects the day's financial developments with the precision of a medical surgeon and the flair of a showman. I'm your host, Sifiso Ngumalo, bringing you the pulse of the markets, the heartbeat of business, as well as the rhythm of the economy. On today's agenda, first, a monumental partnership, the Central Bank of Eswatini and the Eswatini Television Authority unite. This morning, a significant memorandum of understanding was signed between the Central Bank of Eswatini and Eswatini Television Authority. Now, the governor, Dr. Philip Nisi, heralded the alliance as the dawn of a new era, one that promises to illuminate the corridors of monetary policy and financial literacy for the nation. ESTVA CEO Mlamuli Dlamini emphasized that this collaboration is more than a partnership, but it is a mission to cultivate a financially savvy citizenry. I beg your pardon. Number two, CBE, STVA. Now, the Central Bank of Eswatini's as Chief Executive Officer, we are going to continue with the program, and we are going to look at another development by the Central Bank of Eswatini's Chief Executive Officer Mlamuli Dlamini, who chimes more into the particular development that we just spoke about. Let's start the show. Ladies and gentlemen, we'll have to take a quick ad break. We'll be back shortly.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.sz. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
Welcome back, and thank you for staying with us. We get into our business news. Our first story, the Central Bank of Eswatini as well as the Eswatini Television Authority have joined forces in a powerful partnership that sealed to bring the central bank complex at Eswatini to life, educate the nation on smart money habits, as well as to promote everything central bank. During the signing ceremony with the Chief Executive of Eswatini TV, Mlamuli Dlamini, which happened at the Eswatini headquarters in Mbabane this morning, the governor, Dr. Philip Nisi, said a new era of collaboration, education, and national development begins between the two institutions.
We are very grateful as a central bank that through your structures we have been able to achieve this milestone. It is significant in a sense that first it will assist the central bank to capture its heritage, the rich history that it has since 1974 it was established, but more importantly, the various major projects that we are implementing. We believe that as these key projects, especially the headquarters that we are building at Eswatini, it will be very critical to have the wider and broader coverage so that when it is completed, we are not searching in the archives, by the way, what happened, but would have captured the data on an ongoing basis. And this assists in terms of accountability and also keeping ultimately the whole nation informed of what is happening. with that project, which we are hoping to start on time and finish on time within budget. The second value of this MOU is that I am already imagining in my mind, which is part of the phase one of our major project, a museum, maybe a particular corner or one of the sections within the museum which will be digital. And that is where Eswatini Television Authority, through your coverage, will be able to achieve that goal. And then lastly, again, with the museum, we are believing that it will not just cover issues of monetary focus, but broader issues that explain and share the depth and the width of the Eswatini history and the heritage.
Eswatini Television Authority's Chief Executive Officer Mlamuli Dlamini says through dynamic programming, engaging content, as well as a widespread outreach, the collaboration with the Central Bank of Eswatini will put the spotlight on the central bank's work, from monetary policy to currency issuance and everything in between. Speaking during the signing ceremony, the CEO said this is not just a partnership, but a mission to build a financially smart nation.
As a public broadcaster, one of our mandates is to inform the public, it's to educate the public, and having strong collaborations and partnerships with big institutions like the central bank is one of our key areas of focus, because we believe that eMaswati will benefit immensely when they understand the mandate of the bank, when they understand the initiatives, different initiatives that the bank is working on. For example, as you mentioned, the construction project that's going to be commencing soon at Eswatini, right? It is of great importance that eMaswati appreciate the vision of the governor and the bank as to what and how that facility will serve and improve the services of the bank and the country overall. And our platform, right, is rightfully positioned to help the bank in that regard, right, in the sense that we have both visuals and audio, right, and that means we speak to the viewer or the public, right, in ways that stimulate multiple senses, and that really goes a long way or helps have a significant impact in terms of how the viewer or the consumer really relates and internalizes that information that is being shared. So I am very confident that the bank will benefit significantly from this partnership, and also I'm equally excited and positive that it will also be of mutual benefit or of benefit for Eswatini TV as well, helping us move our mandate forward. Some of the key areas that you mentioned, Governor, that you really want this memorandum of understanding to deliver are very much aligned with what we do. I always say that in terms of archived content, we have a lot of archive content, and I'm excited that you're now the bank is now offering an opportunity for us to showcase and also make that archive content that we have be of value to eMaswati. So really excited to partner on that, and also archiving or capturing the progress of the project that you're going to be working on. Again, we're one of the best in the country in that area. So we are really excited to be part of that journey as well. And then you rightfully said, right, just overall making sure eMaswati appreciate and understand what the bank stands for, what's the mandate of the bank, and what the bank is doing. And in other areas where the bank is even warning eMaswati, where there might be areas of risk of fraud, or even advising a Maswati. I always say there's a governor, there's a big opportunity of educating a Maswati about investments. So we are able to do that. We will be able to do that. We are excited to partner and assist the bank in that regard.
10 minutes into the program, that caps off our business news segment. We have 20 more minutes of ground to cover with our Enterprise Watch segment after the break.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.za.
Welcome back to the program. This is our Enterprise Watch segment. Let us understand now this growing concern that there is an economic concentration which can lead to unfair practice where one holding company owns a significant number of companies. Now, fears are that these grants them the power to manipulate prices across sectors. We speak to Eswatini Competition Commission's Advocacy and Communications Manager, Mangoba Mabuza, who explains how the Commission monitors such acquisitions and takeover across multiple sectors in terms of market share and market control.
Welcome to Market View, Mangoba. We came to the Eswatini Competition Commission today because going from one establishment to the next, I have noticed that commodity prices are relatively the same now. So I just wanted to find out if the Eswatini Competition Commission does some checkups just to find out if there is no price fixing in the different shops that we have around the country.
It's a pleasure and thank you for having us on the program. Basically, maybe for starters, one must highlight that price fixing in terms of the law, the Competition Act, is not allowed. It actually falls under what is called per se prohibition, which is outright prohibition. It's just not allowed. That's where everything else stops and we pursue that matter in accordance with the law whenever there are such issues. But in terms of okay, maybe first and foremost, in terms of pricing, what happens is that most of the time, or if not all the time, price is influenced by the cost of production. So therefore, it becomes very difficult for us to, actually it's not within our scope to control as to how much someone must charge in terms of items at the shops. For instance, you will find that, I'm just making an example, if there is the cost of a square meter in terms of rental is almost the same, the cost of electricity the same, cost of water the same. So those people, will find that what they will charge in terms of pricing will be almost the same, because in terms of the input, it's almost the same in the items. So therefore, you will find that the price as well, that translates to the price. You will find that approximately the same prices were found, for instance, in some cases that the difference will be 1 lilangeni, 2 lilangeni, 85 cents, 75 cents. It's normal. So it's not in our mandate to say this is how much they must charge. As long as there is no agreement between the competing entities to fix those prices, which is what is called price fixing, whereby they sit down, competitors, to agree as to how much they must charge. that is not allowed by the law.
Having said that, Mangoba, how does the Commission ensure that economic concentration does not lead to unfair practices? We are looking at a situation where one holding company owns a significant number of other companies across different sectors. Doesn't that grant them power to manipulate prices?
Okay, first and foremost, maybe it's worth highlighting that dominance in the market is not prohibited. There's nothing wrong with being a dominant player in the market. I can also be in the multiple sectors and have dominance and or influence in the market. I can be in agriculture, I can be in mining, I can be in a number of telecoms and stuff like that, but there's nothing wrong with that in terms of your influence. Otherwise, we'll be stifling competition ourselves, because what is key is that companies should be allowed to innovate. That is very important, to be innovative. You'll find that sometimes I'm dominant and I've got more influence in the market because I've got the capacity to be innovative, and therefore I find myself having to accumulate, but also I've got the capacity to buy. So no law says I mustn't buy if I want to buy some controlling shares. What we look at the Commission, for instance, when there's a merger or an acquisition, because it is notifiable, you need to notify the Commission that you are actually buying some controlling interest in a certain company. We therefore look into things that might hinder competition. So if there are aspects of, if there are elements or in acquiring a company or merging that might hinder competition, we would have to look into those. Like I want to make an example again. Let's say I'm supplying quarry, and then also I've got a construction company. So I'm acquiring interest in that quarry. So acquiring interest in that maybe dominant, that has got a huge market, quarry company. What the Commission will look into things like, you shouldn't stop supplying other players in the market with the quarry just because they're also into construction. You know, such things. They need to look into the interest also of the public, that because we want to maintain a situation where it's still competitive, the other players in the market, the public or the consumer is able to choose between. So we will look into those elements that have got potential to stifle competition. Otherwise, we will not stop you from acquiring interest in the market.
You are making an example of a company selling quarry. How do you monitor that that company will not now sell the quarry of low quality to the other company because phela nyalo so unema interest naye, so yayithengisa mhlawumbe so unenkampani leye yekwakha futhi, so utawukhanza ukuthi lalabanye so bathengisela nje low quality?
Absolutely. Through our policy and research department, we don't just approve a merger. If we have approved it with conditions, like in the example that I'm making, we would say you shouldn't stop supplying the others. Also, you should supply them good quality. You shouldn't just give them poor quality just because they are competitors, or also maybe raise prices in an unfair manner. So once it is approved with conditions, then we follow up as well. It is not just the end, to make sure that there is compliance with the law, and also the stipulations of what we would have actually flagged in the merger. And we have a policy and research department that follows up on a monthly basis in terms of looking at market behavior, prices in the market, especially in areas where we've got interest or priority areas. So we will be in a position to, because we do the monitoring, we will be in a position to know that now you are not acting in accordance with what was highlighted as a condition when the merger or the acquisition was filed.
There has been a concern that such concentration results in a monopoly. So I'm just wondering, how do you balance that with the fact that a business person has the capacity, they want to buy the business and create job opportunities? How do you balance that as a competition, ensuring that there is no monopoly situation, but at the same time, there is this one person who has the capacity to ensure that there is growth in a particular sector?
Look, like we are saying, the person has capacity to buy, is permissible by law for the person to have to acquire controlling interest in that company. Like you rightly put, there are issues of unemployment in the country, poverty, and other challenges. So we would not want, for instance, as a country, to find ourselves in a situation where companies are collapsing and people are losing employment. But whenever a company is, if you are acquiring interest in that company, like in the example you are making, we will have to look closely into issues of restrictive trade practices that might be there, things that might potentially hinder competition or lead to abuse of dominance, or some people may kill other businesses just because of this influence and then find themselves in a space where you are the only player in the market. So that is our role as a commission, to control that type of behavior. So those are issues that we will ordinarily pick up as a commission in terms of, by their very nature, having the potential to stifle competition. So we'll pick them up. Maybe it might be a refusal to supply, it might be issues of supplying others with poor quality, it might be raising prices in an unfair manner just to make sure that you remain the only one and others are closing down. So that is our role, to make sure that that doesn't happen. Otherwise, at the point of purchase, at the point of acquiring the interest, we will not, and it's not within our mandate to say you shouldn't buy, or you now have got, in fact, insofar as the laws of the country are concerned, it's not something that is illegal. There's not even a threshold like it happens in other countries where we'll say maybe 40, you can't have 40% of the market. We don't have something like that. So in accordance with the law, you're allowed to buy. As a commission, we'll look into issues of competition and act in the best interest of the consumer and the economy at large.
How does the Commission monitor such acquisitions and takeovers in terms of market share and market control?
Yeah, there's no problem with that. There's no problem with me having influence in markets, as long as it's within the law. So what our interest is the behavior of the business entities insofar as stifling competition is concerned. So if you have got dominance in multiple sectors and there are issues of anti-competitive behavior there, then we zoom in. That's where we then enforce and carry out investigations to ascertain if there are issues of competition concerns. But if not, the market is free. It's a free market. Others could get into the space if they've got capacity, and then there's innovation, because that is our interest as well, innovation. Players must be allowed to compete as long as it's within the law, because competition now will lead to improved quality in terms of the products, but also to lead to innovation in terms of the nature of the products and the services. And as we do so, now it also opens the doors for employment opportunities, because improving quality and innovation, it means you will hire more people. It means you will get more expertise that is unique, and then people are getting jobs. And in that regard, therefore, as a commission, we act in accordance with the government's Nkwea program of action, where we are actually also playing a part in economic growth through contributing to employment and job creation, poverty alleviation, and wealth creation as a country. So that's our interest, and also it benefits the consumer at the end of the day.
How many cases have been reported to the Commission in the past year, or how many cases have you worked on as a Commission?
There are many cases, maybe for, other cases, I must mention that you will find that they are reported to us, and then we do some preliminary assessments to ascertain if it's worth an investigation in the first place. And in some instances, it's not worth an investigation, so we will not pursue it. Where we feel there is an investigation that we can get. For instance, it's not a secret, the Swazimet matter is currently under investigation, and we have notified all parties, the public knows it's It's an issue that is of public concern. We are currently concluding that investigation is ongoing.
You are mentioning the issue of Eswatini. Would you say, as a commission, you are reactive or you are proactive as you deal with cases? Because ukhanza ukuthi kulesinye isikhathi sekuze kuyaphuma kuphumela la public ngikhani senicala kusukuma indzaba niyisebende.
Look, it happens in twofold. In fact, in various ways. First and foremost, it will be people that have got concern. Most of the time, you'll find that it's competitors or people that are whistleblowers or anyone. That would be easy because the information you'll find that is readily available. People have got the evidence, they've got the information. But I wouldn't want to divulge lots in terms of this one in particular because it's currently on an investigation that is ongoing. But also as a commission, on our own volition, we do carry out investigations. The one that I'm mentioning, for instance, the school uniform one, no one reported. It was just done by ourselves on our own volition as a commission.
What you are saying, Mangoba, is that dominance in business is not prohibited, but anti-competitive practices are. This has been a very insightful conversation. Thank you for joining us on Market View today.
That's it for our Enterprise Watch segment. We are going to drive straight into our market analysis with Sanele. Right, welcome back. This is our market analysis. The numbers are indeed in, and while the movements may seem marginal, we do not want to confuse calm with clarity. From Wall Street to Sentin, markets are up, and yes, there is momentum or merely a pause in the storm. That is the big question. Suddenly, I'm very hesitant to use the word momentum after the volatility that we've seen in recent weeks. What is the underlying rhythm here? Is this momentum or just a relief? Eye on the hurricane, maybe?
I think right now what we can say is it's just a pause. People are just waiting to see how this entire tariff story is going to play out. We saw just yesterday President Trump coming out to say no countries is exempt or free from the tariffs. So there is that tariff threat hanging over the markets. But what we saw, I think yesterday, was that shift towards those tech imports into the U.S., where the tariffs were somehow relaxed a bit. So that's what we were seeing there. But if you look at the numbers, I mean, we haven't gotten back to those levels that we saw, that Trump euphoria. So still, when you look at the market, it seems like the bears are coming into hibernate and then the bulls seem to be leaving the market. But we are just waiting to see how this is going to, move in the short to longer term, and if at the end of that 90 days there will be a bit of clarity. So that's what's happening across the U.S. That's why the numbers are somehow the S&P 500 is back on that 500 mark, and then again in Europe, not back to where we want it to be. Usually the FTSE 100 is at that 8,600, 8,700 region, but now they're just at 8,100. And the CAC in Paris is just back to those pre-snap election type of levels, and we just saw them rebound to that 8,000 mark just last month, and then now it's back to that. And then in Asia, again, markets are just there, if I'd use a word, I'd say they're just existing. It seems there's just no clear direction. But those tariff stories somehow moved markets towards the right direction. But we're talking of the Nikkei to 225. They're having swung from close to 40,000, but now just seemingly just playing around the 33,000 mark. The Hang Seng is around the 21,000 mark. And then in China, there, the mainland, when you're looking at the Shanghai Composite, we know that President Xi is out and about playing in Asia and Asia Minor, trying to sway sentiments towards China, given the storm that's happening with the U.S. trade. So that's why we're seeing stocks holding on a bit to them, especially within the mainland, when we know the mainland is the one that's been hardest hit. And then when we move into South Africa, Again, a bit of, not even a bit, there's been market movements back from that 83,000 mark we saw last week. So there, it's purely because gold has gained to an all-new time high of 33,200. And then right now, there's also that pendulum swing on the on this VAT hike that's going to come out. The indications are it's not going to come 1 May. And the DA has promised to stay within the GNU, so markets love that. That's why we're seeing that somewhat of an upward trend within South Africa. That's why we're seeing bulls running just in that markets that we would watch out for. And then in terms of commodities, again, gold has lost quite a bit, not even quite a bit, it's just marginal loss, but it is telling of the fact that markets have gone into hedging mode because gold is now at that 3,200 mark, which is a relatively high figure. And then when you look into crude oil, it's still staying there below that 70 mark. And with other analysts predicting that this year it's going to average around 63, it's just going to play between that 63 to 65 mark because, OPEC will actually has been forced to improve, to increase their output. And then in terms of the currencies, because of all those movements happening in the global front and the dollar and the gold gaining, and also the DA staying within that government of national unity, we're seeing the Lilangeni on that 18 mark against the dollar. Remember, we're now fearing that it's going to go into 20 just last week, and then also against the euro coming down from the 22 mark back to the 21. Hopefully, it's going to get back to that 19 that we are used to, and then we're seeing a bit of an improvement against the Japanese yen. We're going again to that 7.58 type of mark. That's purely because there are signals that the South African economy is going to be a bit stronger, which is what is we anchor our local economy to.
Well, a lot of green, but not so much something to take home about. Yeah. You did say a lot of the markets are just existing, except for South Africa. At least that one we can talk about with a bit of happiness and some confidence there. Ray Dalio, the chief executive of Bridgewater Associates, the #1 hedge fund in the world, said this is a moment of really, really great concern. But it's quite interesting. You said markets are going into hedging mode right now, but it's still very much concerning. Thank you for staying with us. This has been Market View, the Monday edition. Bye-bye.